Finally. Yeah, the next session of the post-lunch first session is on the audit principle-based standards applied as rules. Basically on the how the standards are becoming rules. We have an eminent speaker with us, S.Sundaresan sir, to take us through on this. I request sir to come out to the dais, please. A quick intro of Sundaresan sir. He has more than 34 years of professional experience and he has addressed us often mostly on the ethical standards and code of ethics. He has handled audit and assurance service of large listed companies as well as SMEs. He has extensive experience in cross-border reporting for multinational companies under IFRS. His experience is across a wide spectrum of industries such as technology, telecom, FMCG, manufacturing, banking, and so on. He was also involved in the group audits through group shared service environment. Sundaresan sir has also rendered other services to clients, including internal audits, control assurance services, SOX compliance, due diligence, reviews, valuations, and so on. He's been a member of financial reporting review group of the Institute of Chartered Accountants for several years. He is a regular speaker on various professional forums. It's a privilege to have Mr. Sundaresan with us, and so it's an honor to have you here. Thank you sir, for being here. So a warm welcome to you. Over to you, sir.
Hello, am I audible? Okay, good afternoon. Well, this is immediately after lunch session. So I didn't want to bore you with slides and things which are complex, boring, something like that. So we can have a session which could be more interactive. I will dwell upon some things which are very relevant, but it all very subtle. Okay. We are into the midst of a transition as far as an audit is concerned. Previously, about 10 years back, we had auditing standards. The institute used to prescribe the auditing standard. The institute will have peer review, and they had a QRB. Okay. We were a closed club, so to say. Okay. Came the New Companies Act. In that there were a provision for a regulator regulating the auditing profession, and that quite a bit of time we were objecting as the institute. And some, when everything goes fine, okay, you don't get into a problem. It's like the Indian cricket team. So long as Indian cricket team is winning, okay, those who don't perform well also will be selected. They don't want to disturb the winning combination, isn't it? So one series loss, so it has started. Okay, like that. So long as there was no controversy, there was no any fraud or anything happened, they didn't touch it. They went, even though the provisions were there, they went with that. They didn't start it. The moment it started, some fraud, something started, then immediately within a year or two, the provisions of the Companies Act were invoked. An NFRA over a period has been formed, and NFRA has become quite active now. Okay. Now what is the situation then and what is the situation now? Now the standards are all almost the same. Okay. There are, except for one standard, there is a debate which is going on. Well, at some point of time, both of the NFRA and the institute has come together for a thing, and it will go. It will get settled. Otherwise, the standards are same. Okay. Now, what has changed? Okay, yes, the standards, even in the new act itself, became part of the company law. First, the accounting standard became a part of the company law, and then auditing standards. The auditing standards issued by the Institute of Chartered Accountants was prescribed as the auditing standard till NFRA notifies. NFRA comes into play. Now NFRA comes into play, and based on that, everything is part of NFRA is more active in notifying the auditing standards, whether some standards or auditing standard or quality standards. That debate is going on. That is, we will not enter into that. But quality is very important. In fact, one of the part of our discussion is quality standards. Okay. Now, what has changed is very simple. The standards have become rules. Okay. Now, how are the standards framed? So, the standards are all based on principles. Okay. It's a principle-based standards that has become as rules. It's been prescribed as a rule. So, they're being interpreted as a rule. It's applied as a rule. So, there are things which have changed. Even the same standard, what we were following, what we were following in earlier, say about 10 years back or 5 years back, the same standards have a different connotation, different perspective. Okay? And what are the things which have changed? What is the implication of auditing standards becoming rules? First thing is, it's no longer the institute standard, a compliance with the institute standard, and the institute being a regulator, and they will review it whether you have complied with it or not. A fellow professional will come and review your files at the most, and then he is a fellow professional. He knows how the audit is being done. Okay? So you had not such a bad time. Okay? He was understanding what is an audit, what is the kind of things which practically there are issues. All those things, he was aware of it. Okay? Now what has happened? Now it has become part of the law. Now the strictness with which it is being implemented has increased manifold. So if you have violated a standard, you have actually violated the company law. As a chartered accountant, previously I was violating my own standard. Now I am violating company law. There is a big difference, isn't it? Okay? The punishment which were there before, yes, under the Chartered Accountants Act, the punishments were there. Now also the punishments are under Chartered Accountant Act, but it's being used by someone else. It's some external agency, somebody independent. So now the standards used to be interpreted by the fellow chartered accountant. Now the standards are being interpreted by whoever is there as a part of a regulator. They are not necessarily being chartered accountants. In fact, invariably it is being headed by an ex-bureaucrat, and so they interpret the standard in the way the bureaucracy interprets other laws. Okay? So there is a huge difference between the interpretation of the standard as what we used to do and the standard being interpreted by the bureaucrats who are there. Okay? Now what do they do? The issue is that previously there were a lot of people with experience who will come and look at your files as a peer review or a QRB, and they know, they had experience. In fact, the person who is chosen who should have a proper experience, depending on what kind of a review he is doing, what kind of a firm he is reviewing. Now what's happening is, the bureaucrats are chosen based on various things. So he may not have actually looked, he would have done an audit, similar audit what you have done, or a similar firm you would have come across. So what they have on their hand is the standard. So they just read the standard with a tooth comb, and then they find out, oh, this is what is there, and they interpret the standard, what is in that. They don't look at what is the your practical problems. They say, no, this is the standard. You are supposed to follow the standard. Okay? Now we are talking of principles. Okay? And then we have rule. So the difference between a principle and a rule is, basically a principle will talk about broader principle. Okay? Whereas a rule will be very specific and say this has to be done or this need not be done. This should not be done. You have seen, we have got a lot of rules, income tax rules, various rules which are there. Okay? Or even in other laws we have got rules, say traffic rules. Okay? Where red light is there, you have to stop. Okay? It's very clear. Okay? Now the principles are not so black and white. Okay? Principles will tell about, say I was just speaking about, I was looking at something called professional skepticism. It's one of the basic principles of an audit. What is professional skepticism? Okay? So it has got its own principle, what kind of a thing an auditor should do. You should not just accept whatever someone says. You need to corroborate with the alternate evidence. However senior, however high a person is, a managing director comes and tells you, don't believe it. You corroborate with other evidences. You may know the managing director, you may know the client for 5 years, but still, whatever be your relationship, don't believe them. You corroborate everything with additional evidence. That's what skepticism is. The skepticism is people can commit mistakes and frauds. Things could be mistaken and could be fraudulent. Okay? So you need the skepticism, the skeptic mind should be there. So this is not a rule. This is the principle in which you are supposed to perform an audit. Okay? Now this, when someone else is interpreting this principle, okay, if something goes wrong, a fellow chartered accountant will come and look at it. This is what is the thing which was the situation at that time. This is what you performed. So he will evaluate based on his knowledge and experience. Whereas if someone else comes and reviews it, if something has gone wrong, okay, is equal to, if something has gone wrong in the financial statement, is equal to that you have not performed your audit properly. You have not been skeptic enough. That is the conclusion people draw, because how do I prove that I was skeptic? It's very difficult. You can just prove based on your work done. They will say, no, this work is not enough. In spite of this work, this fraud has happened. So you are not skeptic enough. You are not skeptical enough. There is no professional skepticism as per standard is lacking. So this is the fine difference. This is the difference which happens. You know, long back, we used to have our international tab with the people on there. In US, now it has come down. Every fraud case, a lot of frauds used to happen in those days. Nowadays it's quite less because a lot of regulations have taken place, and which is, so the first case will be filed against the auditor. If something has gone wrong, the first case will be filed against the auditor. Okay? Now why? Can anybody guess why? The first case will be filed against the auditor. Even before, if there is a criminal or anything like that, they will do it separately, but the first case they will file against the auditor. If somebody has lost money, investor is there, they will file against the auditor. Can you guess why? Huh? Breach of trust. Yes? Yes, yes. Anybody else? No, there is nothing called breach of trust or all such things. Huh? They don't believe all those things. It's all a world of business, a world of money. They used to file a case. Even today they will file a case against the auditor because the auditor is fully insured. So if you file a case against the auditor, you will get some money, definitely, 100%. Now what used to happen in those days, none of them will see the court of law, will not go to court or high court, or they also have got a thing, it will not go to court. It will not go only, it will get listed, but by the time it gets heard, the auditor, the insurance company, and the guy who claimed it will reach an agreement, okay? And the auditor, the insurance company will pay some damages, okay, to the guy who has claimed it, and the auditor will, and the regulator also will be involved, and they will say, okay, this is all done to ensure that the legal proceeding don't take place, and there is a lot of things, and the guy who has claimed it, he will get some money out of it. Okay? Now I used to ask those guys who used to come from US, and they said, why the hell are you doing this? Because you are sure you have done a proper audit, that this is not your, what you call as negligence, and when you go to court, you can prove that so much of documentation, so much of work done and all. They say, look, it's very simple. In US, we have got a system of a jury system. Okay? Any such thing goes to a jury. Jury, you know, jury system in US, the jury is selected based on various criteria. Okay, there is a representation, there is a thing. They have no clue of audit or accounts or anything. Forget even otherwise also, a murder or anything take place, there will be a jury. It's not that they are expert in criminal law. They are all common people. Some experts will be there, some of them will be common people. It's a mixed people, mixed type of people. They say if anything goes to a jury, this kind of a thing, jury, the jury is not expert in auditing or accounting or anything. They have only one logic. If something has gone wrong, obviously you have not done a proper audit. It's 100%. This is what will be the thing. It has happened once or twice. So we don't go to the court. The insurance company is prepared to pay, because if it goes to court, the damages will be awarded, say 100x. So here they will have only 20x, 25x, and then the guy who has claimed it also will be happy, because he don't need to spend on the legal expenses. The legal expenses in US is humongous. Okay, so all of us are happy. Okay, now this point why am I doing is that the jury system in the US means the jury will not look into the audit done, the quality of the audit, the quality of your documentation, the standards are done. Okay, they will say if there is a wrong, if something is wrong, you are guilty. Okay, that's the verdict. We are somewhere in between. We have actually reached somewhere in between. The regulators think if some audits, they come with the mind that if some things have happened in the company, obviously the audit has not been done properly. So now what they are doing in the inspection is actually finding out evidences. Okay, finding out evidences where you have gone negligent or you have not agreed the standard. So there is a big difference of reviewing a file as it is without an independent mind. You have done an audit, if somebody reviews a file, that review is different from something has gone wrong and someone comes and reviews your file. Okay, there is a big difference. Okay, in one case, he will be what you call, okay, he will have a mind which is transparent, okay, whether you have done it properly or not. But he knows that something has gone wrong, he will actually try to find out evidences for the mistakes you had committed. That's what has happened. That's what has happened. In fact, a lot of punishment has taken place. So yesterday the regulator was speaking and he has given a thing. So look, except for one, all the actions which you have taken, serious action we have taken is in respect of companies where fraud has taken place and people have lost money. Okay, so you can see the difference. So except one, all others, the company has gone wrong, the auditors have been held guilty. Okay, so that's the difference of a rule-based thing. It has become a part of the law. That's the kind of thing which are there. So there we are living in this world. NFRA is here to stay. Okay, NFRA. It's not that whatever NFRA is saying is wrong. Okay, believe me, people have interacted closely with NFRA. I have not met them because last time when they came, they called me, but I was busy in a meeting. So they make sense. They just take your auditing standard and say, boss, this is what your standard says. I am not saying. Where is the evidence? Okay. Well, they also learned, some of them which they were telling for years, now they have realized it's not our own fault. For instance, there is those communication with those charged with governance. Okay, there is a standard, every standard has got a paragraph on that. So they were always being telling what you are doing is wrong, not adequate. Okay, you go at the end of the audit, you do a presentation for 15 minutes or half an hour, and then interact, and that's it. But your standard talks about, each standard talks about communication. So many of them should have been done even before the audit starts. For instance, risk assessment. There is a provision there on discussion with those charged with governance. Now, when do you do that? That is done before the audit. Your assessment has to be done before starting the audit. Okay? So now they have realized, look, it's not the fault of the auditors alone. It's the fault of those charged with governance. Now, every day they are telling, even yesterday they have come out, that it's the responsibility of those charged with governance, they should interact. Because what auditors will do, so all big companies, they will say, array, half an hour, we can do only half an hour for you, a lot, you do whatever you want. Most of the companies, forget even private, even public companies, PSUs used to do that. One of my friend was an audit committee chairman. When he became a chairman of the audit committee, he said nothing doing. I will have audit committee before the board meeting, one day before, and full day I will have audit committee meeting. He has to put his foot down and do that because he became a chairman and he realized that it is there. So there is the auditing standard compliance. It's not even a one-way traffic, it's a two-way traffic. Those charged with governance have also got to get involved. Okay? So they have to share information. They have to share their risk perspective. Okay? If they don't share, you lose. Because they are inside the company. They know what's happening in the board. They know inside things which you don't know. Okay? If they don't interact, you lose. Okay? So to the extent the standard is not complied with. So the regulator has realized that it's not just one-way traffic, it's a two-way traffic, and so they are now pushing the audit committee. So they will come out with the regulation that audit committee, we have some regulation that audit committee should meet independently once in a year. But once in a year is all not much. You need periodic interactions. Suppose if you are doing a quarterly review, it needs to be a quarterly interaction with them before the audit. Okay, after the audit, during the audit, at least 3 meetings will need to be there according to me. Okay, so that kind of a thing will come. Okay, now we have, yes, these rules have created an issue. Okay, there is a big difference. I was just reading the QRB report and I was looking at the NFRA reports. NFRA, I don't know, they have told any auditor has done proper work. Okay. So good thing is, till now they have not said any of the audit was under acceptable auditing, acceptable, okay, we use only acceptable. Nobody says good, okay. Whether it is acceptable, they have not said anything is acceptable. Any of the firms in any of these years, they have started reviewing the bigger firms every year now, okay. So every year they are choosing 8 firms or something. So bigger firms and the people who are doing bigger audits kind of a thing, okay. So only good thing they have told recently is that, oh, in the past 4 years the audit quality has improved, okay, and there are big firms that are all actually taking interest, voluntarily looking at things which they are coming to us, and then they are trying to improve their systems, okay. So this is a pointer to the group discussion which we will have. So we are on the right track, okay. So they are actually saying, yeah, yes, you are on the right track, but there are a lot of things need to be improved. We will see the group discussion what needs to be improved. So they are there. Whereas when I was looking at the QRB report, which recently has come, QRB now restricts itself to private companies. They don't review listed companies. So roughly it's like this. 30% of the reviews, they said it's acceptable. They have reviewed something like 35 or 40, 35 companies. 30% is acceptable. 60% is improvements needed. Okay, 10% huge improvements needed, means they are not complied with. Okay, they don't put it that way, so they have not complied with. Okay, in fact, the action they have taken, about 5 out of the 35 have been referred to disciplinary committee, which is 1/7. Okay, so they have not complied with. That's why they have referred to the disciplinary committee. So this is on private companies. Okay. Now we say we are principles, and there are issues because it's being implemented as standard. When I was going through the whole thing, actually the problem is not because this is being implemented as rule. We were actually not following the standards as a principle itself. It has nothing to do with NFRA or anything like that. We are just not following the standards. Okay. Now the standards talks about some principle. Now broadly I will tell you, based on my understanding, what kind of a thing is to do. The auditing has got some basic principle. As an auditor you should have. There is ethical guidelines. In fact, I have shared it quite a bit in this forum. That is again based on principles. The ethical things have got rules, okay? But the entire ethical things are all based on rules, based on principles. I have dealt with those principles: objectivity, integrity, professional competence, and whatnot. All these things are all principles, okay? Now, what is the way the audit is to be done is based on principle, because these auditing standards are mandatory for everybody, small, big, medium, different industries, different kind of firms. So there is a wide spectrum of variance in the profession as well as the auditor as well as the auditee. So they have got one standard for everyone. Okay, they are trying to make standards for small and medium and all those things. It's going on. But as of now, there is only one standard. Okay, there is accounting standards for small and medium enterprises, which is being evolved, but not for auditing. Okay, there are paragraphs. If you are auditing smaller, there are paragraphs in that auditing standard. If you are a smaller firm, they have a paragraph. Each standard almost have got a paragraph. What are the things which may apply, which may not apply? Okay, so those things are there in the standard. Now, when you say principle, normally we think principle is a bit lax, it's not so strict, whereas the rule is very strict. Maybe, but when you look at it, the principle is broad. Okay, a principle is broad and it's wide. You get caught into if it is a rule, you can easily say, because we have lots of lawyers nowadays, okay, any rule you violate, they will find a way out of it. Because rules can be interpreted narrowly and say, look, this is what the rule says, so I have not committed to the rules. Followed? Many places you would have done that in the rules. They say this is not as per the rule, yes, this is not following the rule. Whereas the principle is wide. Okay, risk of material misstatement. What this is, okay, you have to identify risk of material misstatement. There is no rule. They have various principles. You look at this X, Y, Z and all. Now this is there in the standard. This is nothing to do with NFRA. Now are we doing it? Risk of material misstatement. So basically the audit is like this. You have to identify the risk of material misstatement and other risks, identify the mitigating factors, test those factors, test them, okay, document them, and then reach conclusion and reach your reporting. This is what basically the principle of audit, the entire spectrum of auditing standard, am I right? Broadly, okay, there are other things. Now when I look at this, you can go back and look at the QRB report. I was shocked. 100% of the audit, the people who have been reviewed, they have not properly, they have concluded there is no proper documentation for identifying a risk of material misstatement and respond to that risk of material misstatement. 100% they have put. Okay, different firms, okay, smaller firm, medium firm, large firm, almost everybody is 100%. Now to me, if this is 100%, none of them have performed the audit. I will say this audit has not been performed as per auditing standard. I would have concluded that, because the core of the audit is identifying the risk of material misstatement. Okay. Now this has nothing to do with NFRA. Nobody, NFRA has not reviewed it. So this is as per standard. So we have not followed the standard. To me, even though they have been very good, they have said 30% of the people have done the thing. According to me, if this is not done, the audit is not done. This is the core of the audit. This is the base of the audit. Okay. If you have not identified the risk, you have not done, whatever work you have done is just haphazard. You are not focused on the risk of material misstatement, isn't it? Okay, you are saying the financial statement are free from material misstatement. That's what is the conclusion you are drawing. For that you have to identify the risk. So if you have not identified and you have not responded properly, then there is no audit. There is, according to me, what audit they would have done? They would have done some procedure. Okay, I would have said that it's not done properly or something like that. Now this has nothing to do with a rule. I mean, the auditing standard being applied as a rule. The standard as a principle has not been followed. So most of the issues which we have, if you look at the various things which are there, now I was going through the QRB report. Most of them talks about policies. There was no policy for this, there is no policy for that. They have been very, very nice to say policy is not there. It's not done, okay? It's not done because according to them there has to be a policy and you have to prove that a policy is followed. So they are saying policy is not there. So obviously if there is no policy, there is no question of following the policy or not following the policy. Okay? If there is no policy, that particular aspect has not been covered. Okay, like for instance, quality control. There is no policy on independent review of quality control. Okay? Policy is, there is no policy and obviously it's not followed. Okay? So they have been very nice to put the policies are not there, this is not there, and all kinds of thing. But most of them have nothing to do with the rule. It's all important items, principles which are there in the standard itself. Now what is the issue? Why is happening? When are we doing the auditing standard lectures? When are we doing auditing standard lectures? Invariably towards the last portion of the year, when people find, oh, this is there in a, which is to be done, tick the box approach. So the first thing, according to me, starts there. The institute has to take the things to educate the members in the auditing standard in a proper way. These just small lectures will not do. Auditing standards are a bit vague. It needs proper training program. We have gone through a lot of training program internally in our thing. It's very difficult. It's very difficult to understand. If I speak an auditing standard, I take an auditing standard and speak to you, you will go to sleep. It's a very good tranquilizer. Absolutely, 100% guaranteed. Okay. So it needs to be, people needs to be trained. It's just not the members or the partners involved. Every member of the audit team needs to be trained in the auditing standards. They should know what they are doing, why they are doing, what is the purpose, what's the objective of an audit. What you are doing has got a direct correlation to the objective, to the audit and the conclusion. They should know. Okay? They should know that what they are testing is very important for the audit report. It's all, everything is connected. Okay? So the first thing is, like one of the ways I used to keep myself, for the past 3-4 years I don't update myself, but not much has changed. So I used to give lectures, I used to take training programs on auditing standards, which a lot of people don't take. Okay. So because of doing the training program, I ensured that I was up to date with all auditing standards. Not only all auditing standards, reading it thoroughly from top to bottom, okay, and identifying that. Okay, like somebody, my colleague was telling, I was just speaking to him yesterday, when we were preparing, they were preparing some sort of package for the audit itself, how to do the audit and document, they are trying to work it out. So he said, some of the paragraphs I read, I have never read it before. I realized, oh, it is there. It's so difficult to put into practice. Okay. So the first thing is we need to familiarize ourselves with the auditing standard. There is no point in telling NFRA is telling this, that and all. Are we up to date with the auditing standard? Believe me, audit is a specialized service. Unfortunately, it has not got the recognition. It has not got the recognition. I know because I used to do a lot of other work till 15-20 years back. Last 15 years, almost 15 years I've done only audits and related to audit and assurance services. Before that I used to do a lot of other work, other services. Now even today, if you look at firms which do other services, the rate at which they recover their services is much more than audit. Okay. So it's even simple thing like income tax services. You will know, your client will prepare to pay more for income tax than an audit. Okay. The audit needs a specialization, it needs to special focus. The second thing which, in fact, forget second thing, it's the fees. The fees in which we are having, I don't know how many of you think your fees is adequate. How many of you feel that the audit fees which you are charging is adequate? Good, good. All of you feel your charge is not adequate. That's a fact. Forget it. It's not. It's a fact. Okay. The fees which we are charging, we have undersold the profession. Now, this is not things which is a business or anything like that. Fees is a fundamental to the services you are rendering. We are rendering a business. How will you render employee people? You pay salaries, your overheads, everything. It's all a part of a business, okay? Except you are a professional services, it's otherwise equal to any other business. So you are running a business, okay? And if you don't charge, how will you be able to give? I was just comparing. I have 2 vegetable vendors near my house. There is one vegetable vendor, she charges almost 30-40% more than the other vegetable vendor. She is, okay? But she gets good business. No one cribs about paying 30% more. I order from her. Why? Because the quality of vegetable she sells is much, much better than the others which are there in that area. Because she picks up the proper thing, she picks up good vegetable and keeps it separately, so you don't have a problem. And if you buy vegetable from her, it will last for a week, 10 days, okay? But she charges 30-40% more. Now, it's comparing. A vegetable vendor has got a good logic on quality, and geez, okay? Now, I was just taking that example. Now, how do we? Everybody will ask me, "Arey, if I charge higher fees, I'll lose a client." Believe me, I have not lost a single client because of asking for more fees. They will crib, they will pay, okay? Now, most of them will not crib. Lot of them will not crib, okay? Now, what is the reason? What is you need to do? Possibly, this is a practical thing. You actually forget your fees and do a proper audit, whatever has to be done as per the standard in 1 year. And go back to the client and tell, look, this is the work which I need to do as per the standards, as per professional standard. My fees is this much. My cost which I worked out is this much. You work out a cost based on your firm and whatever is the rates. So you need to give an increase. You will be surprised. There will be some resistance, but there will be empathetic things. So you demonstrate the quality, what is needed to be done in an audit, and then go and ask for a fee increase. I will tell you it will be a lot of difference. Okay? Now these regulators have picked up these fees. Why am I dwelling a lot on fees? Is this, there is a big danger, the profession losing out audits itself. Now why are we there? Because the audit is mandatory under the law. Okay, in fact, in our firm, people internationally looked at it. What happens if audit is not mandatory? How many of the people will come and ask for an audit? Tell me. If audit is not mandatory under any law, how many of your clients will ask for an audit? So we are there because of the law. Hardly 10% will come back and say, no, I want to do an audit independently. Okay, maybe 10%, okay, not more than that. So now the regulator, in fact, there is a report which has been there in the earlier, and he is still a part-time member of the NAFRA. Okay, he is a chartered accountant himself. Okay, so he is not a chartered accountant in practice. He has not worked as a chartered accountant. He was an academician, with a doctorate. So he has actually done an exercise and then worked out about 5 years, 6 years back. This report was, I think, 1.5 lakhs is the minimum audit fee needed for any company, Chotu, Motu, anything. Without that, you can't do an audit because you've got so much of accounting standard, you've got so much of auditing standard, so much of work to be done. Okay, even everything is fine, to say everything is fine, then you need to do minimum work. So he worked out and then he took statistics and he found out some 80-90% of the companies, the audit fees is less than 1.5 lakhs. So he actually wrote in his report, it's there in the domain still, I think. He says the audit, the smaller companies audit should not be mandatory because the audit is farce. He actually wrote saying that with this fees, you cannot do a proper audit. Okay, they are just doing, they are not doing audit as per, there is no need to do review and all file. They cannot do a proper audit with this fees. Okay, so the fees is important, and I have done that in the, whenever I have spoken on the professional code of ethics, there is things on fees. It's a financial interest. If your fees charge is lower, it affects your financial interest. You are not independent, you are biased. That's what is the code says. Because your fees is low, you tend to do lower work. You don't do the work which is required to be done. So you try to cut short. Okay? So fees is important. I am repeatedly coming and speaking on fees because I feel that's the fundamental point on which there is a problem with audit compliance, auditing standard compliance. Okay? People come and tell me, oh, I will not get this. Unfortunately, the audit rotation has resulted in taking a hit on the audit fees, because whenever you rotate out an audit, the companies come and tell how much you will reduce the audit fees. It has happened to you? Whenever you take an audit from another firm, people have come and audit, will you give me a reduction in audit fees? It happened from 2017 onwards, it's becoming a regular affair. Okay, so unfortunate it is. It's not that our fees were very high, our fees were reasonable. We took a lot of time to make it reasonable, but it has gone the other way around now. Okay, so it has to be, the regulator is very clear that you are not charging a proper audit fees. But he says, look, I am not responsible. You go and ask guys, people have went and asked him, why don't you help us out? He says, that's not my problem, it's your problem. The profession should address it. Okay, for instance, the branch audits of banks, the fees is reasonably good. Okay, but it's reasonably good, but there is a lot of resistance from the banks. They said, why should I have a branch audit? Okay, sooner or later it will go away, because they say this branch audit there is nothing being done. There is nothing there to do in the branch audit. Everything is centralized. Okay, the concept of a branch itself has changed. So soon this we have a good business, but it will go away. Our institute is holding on for the past few years. Okay, but it will go away. At some point of time it will go away. The branch audit things will go away, the things which you are getting. Okay, it was a good fees because it was done at a group level, at the institute level, they tied up with the thing. Nice good fees they had done based on the thing. Okay, apart from that, I don't see much of the fees being higher. Okay, so that's one of them. Fees is one of them. Risk of material misstatement. I just gave an example because it is there. I was shocked to see 100% there is I think the report which you had sent 2 days back. It's misleading. They have just the graph was misleading. Okay, each one they have put a bigger thing. Okay, 20% also is and the graph each graph was varying size. In fact, I have to tell the institute you can't have this kind of a thing. It has to be consistent. In fact, it should show the full page 100%. It was not showing. Okay, they have put a half thing and it said 100. Okay, so it is necessary that we follow these principles properly. It has nothing to do with the rule. The moment you follow the principles, okay, it's easier for you to follow it as a rule. Okay, now what are the subtle things which we made to change? Now, as a standard, for instance, everywhere the regulator, when you go to the regulator, the senior guys, they tell us, yes, I accept. For instance, your auditing standard. See, 80% of the standard may not apply to many clients which you are auditing. 80% may not apply. Okay, or risk of material mistake, there may be one risk. Okay, there could be additional control. Because of that, you have not done the work. You say the standard says based on your judgment. Judgment. Okay, judgment is a word which is being across the standard which is used. Okay, I remember I took a section based on the application of judgment. Okay, now you will say that. But the regulator comes back and asks, now where did you document that you applied your judgment? What did you consider for making your judgment? Have you documented this based on these factors? I have made a judgment that this is not adequate. This is not needed. This is missing. So we go back to our thing on documentation. We have improved on documentation in various aspects possibly. We are documenting what is the work which you are doing. Now the documentation needs to be improved in terms of what is the work which you have not done and why you have not done. That needs to be documented to ensure the compliance of the auditing standard. Okay, now do you know the cost of audit? So many of people used to tell, you guys spend 30-40% on work, 60-70% on documentation. Okay, well, that's what is there in the standard. Everything I do or don't do, I have to document. Okay, it has to be double, isn't it? If I do some work and document, fine. Now I have to document more for the work which I have not done. Why I have not done? What is the reason? What's the judgment? Everything you have to do that. Okay. For instance, wherever you have done, we have said that there is no material misstatement in these assertions. You need to document briefly why you feel there is no material misstatement and what is the factor you considered. Okay. Otherwise, some fraud takes place. They will say, you have made a judgment, you are grossly negligent, you have not even documented, you have not even looked at this thing area whether there could be a material misstatement. Okay. If you have documented, yes, you can say in the court of law, look, I made an error of judgment, possibly, but this is my judgment. This is how you have done it. So in the olden days, this is all changing now. If you see the court of law in the various cases, if you have seen in the disciplinary cases, there is a distinct difference between error of judgment and gross negligence. Okay, take a case, even the doctor, a lot of things goes failure. It's an error of judgment. He made an error of judgment saying this is what should be, and he does the surgery. It may go wrong. But if there is a gross negligence, you can sue him. Okay, so there is, at least you need to be proved that you made an error in the judgment, not in the end, not a gross negligence. So it's needed. Okay, so it's very important to do. So this is what is the way ahead. I look at it. Okay, I'll just stop in that. This is, you can go on speaking on this. Okay, various things in the NFRA report and all, individual items and all. Okay, but I don't want to do that. I will like to hear from you. Is there anything which you want to clarify, or your doubts? What kind of a thing you should need to do? Whatever. We'll have some few minutes. I've just got 5 minutes. I finished exactly at 3:15. I didn't know that. Any questions? Yeah. Yeah, mic is there, if there is any mic. Yeah, just tell if I can hear you.
Not a question, just to share my experience. When I qualified and took my COP about 15 years back, first thing during my internship, I had felt that there is no independence for auditors, at least where the auditing and the appointing authority is same, especially in private companies. So when I took up my COP, first thing I did is I wrote to PMO, because there was a lot of hype that they will respond in an assertive manner on many aspects. So I wrote to them saying this is an issue. So I cannot go to my appointing authority and say you have made this mistake. First thing they do is they fire me. So as far as other cases which I wrote to PMO, I got a favorable response. On this, I did not get response even till date, because there is a pressure from industry bodies not to give that independence to auditors. So basically what I'm trying to say is it's not a level playing field. We are not allowed to do a proper audit in a way our standards expect us to do, because there is a conflict of interest at the core itself. So this is one thing I want to share.
Yeah, no, this is, see, I don't think there's just a conflict of interest just because somebody is appointing you and then you are auditing them. That's what you're trying to say, isn't it? Yeah. The company is appointing me and then I'm, not necessarily. This is not necessary, okay? So, it will never come. I can tell you, PMO will not reply, it will never come. Just imagine how the government keeps appointing auditors for thousands of companies and lakhs of companies, and somebody sitting there. Okay, it's impossible, it cannot come. Nowhere in the world it is happening. Okay, so I don't think your independence or anything is affected by somebody is appointing you. There is enough corporate governance measures which have taken that the people who are appointing, there is an audit committee is involved who are made of independent directors. They are fully responsible. They are more responsible than other directors. Okay, the things have changed.
No, I'm not touching on those areas where there is an independent governing bodies. Yeah. I'm touching on those cases which are private companies, not coming under any of those parameters. Typically SMEs.
Okay. No, even private companies. So even in private companies, see here, you have concluded before you started. Have you taken an audit of a private company? Have you done as per the standards? Okay. I have done lots of private companies. Frankly, I have done more private companies than public sector companies. I can tell you hardly 1% of the people did not comes and try to influence you on independence. It's a myth. It has no basis. Okay? If you do a proper audit, there is a value to it. Do you know if there are private companies, anybody is involved in private companies, PEs and all, The private companies which has got a proper corporate governance and a proper audit done, it's valued at least 50% more than the similar companies. Do you know that? There is a huge value attached to an independent audit and a proper accounting in private companies. In fact, lot of companies appoint people much in advance of getting listed, okay? And they try to ensure they will improve. We will improve whatever you tell us, okay? I have seen a lot of private companies. I have not seen any private company who has put my foot down, saying that, look, I want this way. Okay? So it is nothing to do with private companies or public company. It is to do with our own individual thing. You come and this is no basis. How many times you have gone and done a proper audit, okay? And then the private company guys, the fees is the issue. I told you, fees is an issue. If you don't have the fees, just give up. I was just talking to people who are there. This is what the suggestion which I will give. Just give up the audit. If people start giving up the audit for fees, they have to go to one chartered accountant. So they will start paying. They will understand that the market rate for an audit is X. They have to pay it. Okay? Because some people are willing to do any rate, market rates come down. So according to me, this is not affecting. The private companies are not affecting. According to me, just because it's a private company, your independence is affected. Okay? Or that's what what you are telling, no? That's what is the regulator has done, NFRA. He said there is no need of an audit for private companies. You are actually giving them a chance to say, yes, you can't do an independent audit, we will take away the audit itself. Private company, there is no mandatory requirement for an audit in USA. Do you know that?
Yes.
No audit is required in the private companies. Okay, even in UK, there are exemptions for private company audits. If they are smaller, which are of some size, there is an exemption. Okay, we don't have an exemption. India is the only country where there is no audit exemption. Okay, so I don't think there is an issue with that. It is because of how we do our work. We look at our audit and we do our work. That's it.
Okay,
If you don't get the fees, resign. If you are, what will you do if the things are not proper? You have to qualify. You'll say qualify. Okay. I have rarely seen any of my client, if I have to qualify, they have said, yeah, qualify. Okay, India is actually a great country. If they feel that more qualifications mean it's better. Okay. Luckily, we still don't have a law which says qualifications are not allowed in the audit report. If they have, they were trying to bring it. SEBI is trying to bring, saying that there should not be any qualification at all. Luckily, they have still not brought it. Then there will be a lot of pressure on auditors, don't qualify. Okay? Now there is a freedom to qualify. Only the SEBI is coming and, in fact, SEBI has gone and done an exercise. Now they've stopped. They actually used to send us reports into FRRB to say that the qualification is correctly done. So they are looking at the other way around. If the auditor has not qualified, if you are wrongly qualified, you should take action against the auditor. That's the kind of thing SEBI was trying to say, but at some point I think they have stopped that. Then I think they got a good thing is saying, look, if there is a qualification means something wrong, you should be happy with that. Okay? You should not go and do things which are there. Okay? So I don't think private companies have anything to do with it is a question of how we put ourselves as an auditor and what kind of a thing you do. You go and tell, look, this is what the audit, this is what is required under law. Forget an audit, it's required now a company law. If I don't do this, I can't give this report. Put your foot down, that's it. I can tell you by experience, by things, we have undersold our profession. We have undersold audit, according to me. We feel the audit is nothing because the report is a small report which we are giving. Okay, and then they say there is no value addition. The report is a value addition. The report which you are giving, a clean report, has to be valued. Okay, so that is the value which you are giving. He said, look, you are giving a clean report. Means that your financials are in a good shape, financial statement, it's reliable. Okay, that is the value you get out of it. Okay, any other?
My question is from the other side of the table. I'm not in practice, but in industry. And I've seen the importance that was given to internal control on financial reporting a few years back when the whole thing started. And now, I will not take names, but managements have also thought, okay, those are consuming a lot of cost, and in today's competitive world, there is a lot of, what do you call, reduction or simplification as it is called, but then it kind of dilutes the effort on ICOFR efforts at a company level. And then, yeah, if you combine that with what you're saying, right, we are looking at a serious gap, both from a management perspective and also from an audit perspective. And then those cost pressures are bound to remain, and I see that it is going to only increase, right? So it's kind of paradox, right? While everyone wants to have a good quality of controls, both from a management side, from an audit side, nobody is willing to pay the price. Company is not willing to pay the price to the auditor, and the customers are not willing to pay the price to the company, right? So how do we solve this paradox?
Okay. No, I understand there is a cost. Audit is a cost. Okay?
Compliance is a cost, and then that's...
So 1 minute. You go and see all our companies. Audit is not even a cost. You are talking of companies where audit is a cost. Okay? The audit is not a cost. Audit is not even a cost in most of the companies which we have in India. US, it has taken it to a level, yes, it is cost, yes, there will be pressures, you need to build in efficiency, you need to do that. We cannot go on charging everything, you need to justify. Yes, those things are all will come. But just now there is no such discussion. Audit is not even a cost, not even discussed. If you look at your materiality or something like that, it will be point something. Okay? So I understand that. But let us reach to the level it is at least discussed as a cost. Okay, we are no longer there. Audit is not a cost to be bothered for most of the companies in India. Okay, yeah, some of the bigger companies pay well, some of the financial sectors pay well. Okay, but most of them don't. Okay, yeah, let us move it to as a cost. It is a cost. It's a service rendered. There is a value added to it. The value to the financials added. The company value is increased. As I told you, there is a distinct different private equity guys. They have got a lot of things. The non-listed companies. He was talking about private companies. There is a more value to private companies because they have a proper audit done. Okay, so let us reach to a stage it is at least spoken as a cost. Then we will come to it whether it is high or low, what efficiency and all those things. Yeah, we have gone through that. Okay, yeah. In many of the evolved markets like US, UK, Europe, the audit fees is significantly good. They are actually talking that audit as a cost. How do you reduce the audit cost? Yes, you sit across the table and say, do this, this, this. I will reduce my work. Do that.
No, indeed, and that's what I'm saying. It's more a long-term risk that I'm seeing.
Yes, yes.
That people are willing to sit across the table and say, okay, you have these controls. I'll place reliance and kind of bring down my effort. But then that also means that the organization need to devote resources, which will, let's say, end of the day result in a cost to the customers which they need to pay. And today's competitive world, it is becoming quite a challenge. And then they are looking at how can we...
You are saying about the multinational companies, isn't it? So when they outsource here, a lot of GCCs are there in Bangalore. Oh my God, they try to reduce the audit fees because they say, we have cut our costs so much. So you also cut your cost as an auditor so much. Okay, it's all going. That's all good. Okay, that's all good. They have reached a stage of audit having a reasonable price. We are no longer there. We are nowhere there. Okay, and the audit rotation has actually gone the other way around. We have taken us other way around. I can tell you that. Okay. Okay.
Thank you.
Thank you. Thank you.
Thank you so much, sir. It's always a pleasure to listen to you. This will move on to the next session, which is on